I think 2025 could be the year that silver, I'm not saying it's going to be silver's year, because I think going forward past 2025, we're going to have huge moves in silver and gold, but it could be the year that silver starts to take off and outperform gold. That's my forecast for 2025. Monday, December 16th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at gold and silver today, and the fact that despite having a very good performance this year, gold and silver look to be kind of a hated sector right now, especially in the mining sector. But what we're going to focus on and keep things in perspective is the performance of gold and silver bullion versus the dollar and the major currencies. Before we go into that, I just wanted to thank all of you for your interest in the channel and for all the new subscribers. We just hit 120,000 subscribers. I've always said that my objective is not to get as many subscribers as possible, but to create valuable content for all of you. And if it comes, the subscribers and the views, so be it. And that's what I plan to do going forward. And so back to gold and silver. And before we go a little deeper into gold and silver's performance up until today, and I've done it till with the prices at 8 a.m. London on the 16th of December. So if you're watching this tomorrow or later on, yes, it might be slightly different. But I wanted to touch upon Bitcoin and also Nvidia, Amazon, Netflix, and Tesla, because I lived through the dot-com bubble. Yes, I got involved in Amazon and made like 60% in 2 weeks at one point. Everything was like pretty much a little bit like today. Anything that had a .com on it, it went through the roof. And then eventually, of course, the internet didn't finish, but that exuberant bubble that we had collapsed, and we saw the NASDAQ drop massively from the top in 2000. I'm not sure exactly how much it dropped, but like 80% or something. You might want to correct me. But it was a brutal bear market. Yes, Amazon survived and it's still doing really well. But a lot of the dot-coms that were around, they're not around anymore. And I think we've got the same kind of bubble mentality right now. And I'll give you an anecdotal evidence. Some of you have probably heard the stories in the 1920s. I think it might have been Joe Kennedy Sr., RFK's granddad, or it could have been Jesse Livermore, who said that once the shoe shine boys started giving stock tips, I knew we were near a top. And I have a story for you. My wife went to play bridge with her friends a couple of weeks ago. They're all in their 50s. And one of her friends said, I've got these friends from school, so long time ago. They've now become Bitcoin certified agents. And my wife told me that story, and I thought about the shoe shine boys giving tips on stocks. So now middle-aged housewives are becoming Bitcoin certified. So you can make your own assumptions and conclusions from that, hopefully. it's for you to decide what you should do. But I've been looking at some numbers here. It looks pretty fresh. It could be wrong, but year to date, Bitcoin is up about 150%. But if you invested in Nvidia, you would have lost out. You're losing in terms of Nvidia. Is Nvidia the next big thing, the next currency? Who knows? Well, Nvidia is up 178% year to date. Let's check Amazon. Well, Amazon's up 51, so not that good. Netflix is up almost 100% year to date. And Tesla is up 75%. So what I'm trying to say here, I think this is just, yes, all this money flowing into the system. And you might think, well, but the Fed has been raising rates. The M2 has come off since 2022, but it's picking up again. The Fed's cutting again. And even more important, and I spoke about that yesterday in my live stream, the U.S. Treasury has been spending like a drunken sailor. They're running 7.5% budget deficits, and they're probably going to keep doing so for the next few fiscal years. Unless, of course, Mr. Musk cuts the size of government, which I think is going to be very difficult. So, yes, gold and silver been very boring. Of course, if you compare it to this tech craze, this AI craze. I'm not saying AI is a bad thing, but I think people are getting ahead of themselves. So I've looked at some numbers today just to give you an idea of what's going on and what I think is going to happen in 2025. It's always tricky making predictions, but I'm going to make it. If I'm wrong, I'm wrong, and I'll admit it. But looking at where we are today, and I took these prices from 8 a.m. It's actually 20 past 8, but you have to take a price somewhere, even though the price of gold and silver, they trade almost 24/7. They're probably the most liquid metals in the world, I would say, because they're money. But anyway, back on the 29th of December, 2023, gold was fixed, AM fixing in London at 2,062.40. And for this exercise, I took gold at 26.53.60. So up 28.66%. Yes, it's falling behind the tech space and Bitcoin. Am I concerned? No. I think it's a good thing. Gold and silver are still under the radar, nowhere near to being overbought. But even that I don't buy into. I think, unfortunately, our fiat currencies, they're going to continue to sink. And gold and silver are going to keep going up. Not because something new and special has been found about gold and silver, but it's because they've been around for thousands of years and people have always valued them. And when everything around you loses value because of the credit bubble unwinds, that's what happens. It's very simple. So in pounds, we closed the year last year at 1622. And right now, or a few minutes ago, we were at 2100. So that's a 29.47% rise. So you can see by that number there that the dollar is slightly higher, has outperformed the pound versus gold. So it hasn't been debased as much, but very, very little difference. But the currencies that have done really badly are the euro and the Swiss franc in terms of the major currencies. I haven't looked at the yen, but it's even worse. And the reason why I think this is so is because they're cutting their rates, especially the Swiss. They cut rates last week. They halved their rates from 1 to 50 basis points. It was a surprise. ECB cut as well, but their prices in gold, the price of gold in euros is up 35.41%, and in Swiss francs, the supposed safe haven currency, it's 36.27, and I think the same thing is going to keep happening going forward. And what do I mean by the same thing? Well, we're going to see continued debasement of the major fiat currencies versus gold and silver. And silver, by the way, I just did the US dollar equivalent, and you can calculate from gold what the other currencies did. Silver's up 28.71% versus the dollar. So its performance has matched gold, which in my opinion is leaving a lot of room for silver on the upside. And I think 2025 could be the year that silver, I'm not saying it's going to be silver's year, because I think going forward past 2025, we're going to have huge moves in silver and gold, but it could be the year that silver starts to take off and outperform gold. That's my forecast for 2025. I'm sorry, I don't have exact price forecast. That's always very, very tricky. But as I said, they're going to start to sink, or they're going to continue, to sink the fiat currencies. And the only way you can measure fiat currencies is versus gold and silver. Some people might say, oh no, it's against Bitcoin. I'm sorry, it's not, because even though Bitcoin might go to 200,000 by the end of 2025, we could see it down to 40,000 before it gets there later on in the next few months. That's how volatile and dangerous it is. And I've said many times, and I covered Bitcoin years ago, that go ahead, buy some. But if you do, keep it in a hard wallet, in your own private wallet. Don't keep it with exchanges. Don't buy the ETF. It's just like, well, it's not like gold, but you don't want the counterparty risk, right? So keep it in a hard wallet or your own private wallet. Keep your codes and your passkeys safe, because if you lose those, you can't get your Bitcoin back. But yes, buy a little bit. Don't mortgage everything like Michael Saylor has been telling people to do. I think that's very dangerous, and you might end up actually losing money in a bull market. And by that I mean you could see Bitcoin drop 40% in the next 6 months, and if you're leveraged, you're wiped out. And then 6 months later, Bitcoin goes to 200,000 and you don't participate. So again, yes, I'm not tempted to go into Bitcoin. And I did get involved in Bitcoin, for those of you who might think I'm an old boomer, even though I'm not. I don't think I'm a boomer. I was born at the end of 64. I don't really care about those terms, but I know quite a bit about Bitcoin. I started looking into it in 2011, and one of the reasons I didn't like what was going on was that a lot of Wall Street banks were getting involved, like Goldman Sachs and others in 2017, and I thought, I don't like that. So what about this Bitcoin reserve that Donald Trump and the US Treasury are going to accumulate? Well, I think that's just a lot of hot air. We're going to have to see what happens when the administration actually takes over on January 20th. So, and I'm not even touching the precious metals miners here. I think they're they're cash machines, and they're heavily undervalued as well. And the thing about miners, there's different ones, of course. There's the junior exploration, which is a lot more speculative in talking about those. I like to say that, yes, I do a paid promotion once a month at the most, and if I do it. And the reason I do it is that a lot of you ask about opportunities in the sector, but one thing that I've emphasized is that they're very risky, and you gotta make sure you do your own risk assessment, and that you don't put all your eggs in one basket, even though you might want to. It's up to you. I'm not saying you should. I personally don't. I still think the base for savings, long-term savings, is physical gold and silver. But anyway, yeah, the exploration companies, they haven't even dug the gold out of the ground. They're not producing. It's more speculative. They're drilling to try to find the resources, and hopefully developing their finds into a mine by selling to the bigger companies or trying to build it themselves. But yeah, the major mining producing companies, they're like a mint. They're going to be the next central banks, even though they're not central. They're going to be producing the reserves for the next, the new monetary system, in my opinion. It's not going to be the Bitcoin miners, right? And that's why the central banks around the world, outside the West, well, even in the West, countries like Poland, they're buying gold hand over fist because they know what's coming. This current debt-based system is on its last legs. So the reason why I'm talking about this is because, I'm trying to tell you that I think you need to be strong and believe in the fundamentals, and not let Bitcoin or Nvidia or Tesla or whatever change your path. Yes, it's very easy to give up and change your path. And I mean, gold and silver have been really steady, especially gold. Since the beginning of the century, it's returned almost 10% a year. And this year it's returned like almost 3 times that. So there you go. That's what I wanted to talk about. And with that, let's just quickly look at where the markets are this morning. They're going to start to get a lot quieter, the markets. I think this week is probably the last week where things will be normal. Next week, we've got Christmas, so it's a different story. It's going to be a lot thinner. So we've got, 8:30 a.m. London time. We've got spot gold at $26.59. We're up $11, right near the highs, actually. The low's been 43. Silver is up 14 cents. So not outperforming or underperforming gold, up just under 0.5%. High's been 70, the low 45. Dow futures is up 44. NASDAQ 100 futures up 10, and the S&P is up 4. What about the currencies? Well, sterling is up a little bit, 26.39, up 0.17. The euro as well is up 0.1%. The dollar is unchanged versus the yen, and the dollar is down versus the Swiss franc, 0.25%. Dollar's up against the yuan at 728.73, and I think there's some news out of China. China consumer slowdown shows urgent need to encourage spending. So even China is in this debt-based bubble, even though they've been a little more prudent by acquiring a lot of gold. So I think they will be in better shape than the West when the dust settles. So oil, WTI is down 0.5% at 70.55. Brent down about a third at 74. High-grade copper is unchanged at 420. What about the bond markets, which is really important? Well, the 10-year yield is down about a basis points at 439. And let's check the 10-year gilt yield. That's at 445. So continue to tick up. That's not good. I think the whole of Europe, the UK included. The reason I say that is because the UK is not part of the EU. But be as it may, we're all in a recession. And I think the Bank of England is going to cut rates this week, even though it's not expected that they will. And the rate cuts in Europe will accelerate. What about the bond market? Well, in the US, it's a different story. I think the longer end is going to be in trouble, even if the Fed, well, they're going to cut this week, but not sure about next year because they've done a lot of deficit spending, unlike Europe. So where are the French yields? Because France was downgraded after the close on Friday. Well, their 10-year is up 3 basis points at 3.06. So still well below UK and US yields. So yeah, that's it then. So with that, I'm going to wish you all a very good day. Take care. Bye.